Hello and welcome to a VSA Capital video. I'm Oliver O'Donnell, Head of Research at VSA Capital, and today I'm delighted to be joined by Ross McElroy, President and CEO of TSX-listed Fission Uranium. The company is developing the Patterson Lake South project in Saskatchewan, Canada, and today we're going to find out what they're up to. Ross, how are you and how are things in Canada?
I'm doing just great, Oliver. Thank you. Things are good. Summer's here, and a lot of forest fires as well. So smoky, but quite nice out where I live. So
good. Well, yeah, I've seen the videos of the air going into America, but
yes.
Perhaps you could start off by giving us a 1-minute summary of the company and the project, and then we'll get into some Q&A.
Yeah, sure. So maybe just real highlight, I guess. Consider Fission as a uranium developer. Our flagship property is called the PLS project, and its deposit is the R deposit. So we're located in Canada's Athabasca Basin, so we're in the province of Saskatchewan. And geographically, I suppose, we're over in the west side, the southwest side of the basin. We're maybe, we've made the discovery about 10.5 years ago of the R deposit, and we've been able to advance it substantially over the years. We've completed a feasibility study on it earlier in 2023, and we continue to march the project onwards towards production. So really, that's our story. Fairly simple, but large, high-grade deposit in the #1 jurisdiction in the world. And it has tier 1 low operating cost potential.
Brilliant. Well, perhaps let's start off with the region. You mentioned it's tier 1. That's from a sort of permitting and that sort of perspective. But the Athabasca Basin is, a preeminent region for uranium. Why is where you're located so important?
So, it's pretty commonplace for deposits in the Athabasca Basin to be an orders of magnitude higher grade than anywhere else in the world. That's just the nature of finding a deposit in the Athabasca Basin. And, we're one of those. We're located just outside of the Athabasca Basin itself proper. So we don't have a sandstone cap on top of it. We're right where the basement rock actually comes right up to surface. That's where the deposit is. So it's shallow. It's about begins at 50 meters below the surface. So you have the first 50 meters being sandy overburden, just accumulated dirt and sand. Then you're into the bedrock, and that's where the deposit lies. We're looking to advance this as an underground operation, about 1,000 tons per day, and yet able to produce over 9 million pounds averaging per year over a 10-year mine life at extremely low cost. So, those are some of the highlights that really make this special deposit.
And you mentioned that feasibility that came out in 2023. That was an update. So were there any key changes there, or was it really sort of updating for inflation, price changes, and that sort of thing?
Yeah, sure. All of the above. It was a 3-year span between the pre-feasibility done in 2019 and then the feasibility, which published early 2023. So we did see a lot of inflationary numbers in there. I'm quite happy, though, to report that there really weren't any surprises. In fact, we came out ahead, lower capex overall, and this is in the inflationary environment. So that was very positive. We still were able to establish that this will be one of the lowest operating cost mines in the world. We're looking at still under $10 a pound US OPEX. And by the time you add in all in sustaining costs, you're still under $13 a pound US. That is some of the lowest cost producing uranium operations in the world. And, so I think that, those were numbers that I think were really quite impressive. I think one of the changes we saw was actually a longer mine life. So We're now looking at a 10-year mine life and plenty of room for growth. So our expectations are that we can operate this for far longer than 10 years.
And what is the driver behind that low cost base? Because I think most people looking at underground operation wouldn't expect it to be at the very lowest end of the cost curve. So what are the drivers there?
So the drivers, I mean, there's a few reasons why that's the case. First of all, starting with grade, we're looking at high grade deposits. So we're averaging, close to 2% U3O8, which is a lot of uranium concentrated in a very small amount of tons. So that if you're moving less tons and getting a great deal of uranium out of the ground, that that allows you to do so at a lower cost. The fact that we're so near surface, as I mentioned earlier, we're 50 meters below the surface where we start. So you've got very little development from the surface to get down to the ore body. So these are reasons that I think, bode well for being a low cost producer. And of course, the price of uranium continues to rise, and it's moving substantially north over the last few years, and we think has got a great deal of growth ahead of it. High uranium price, high concentration near surface, straightforward, low technical risk type underground mining, they all factor into being a low cost producer.
And with the capex, it's about 1.1 billion Canadian. How does that break down, and what have you got to do in terms of infrastructure and water provision and power?
Sure. Yeah. No. Well, we are in an area of the Athabasca Basin where there isn't an awful lot of infrastructure. We do have a road though that runs up into the property area. It's a highway, so it connects the property with the major cities to the south. So I think the most important part of infrastructure is there by having a road already in place. But areas that we do have to build, we'll be generating our own electricity on site. So we're not on the power grid there, so we'll have to generate electricity. And I think substantially we'll be looking to build a mill in the area, so a mill to produce a yellowcake concentrate. That's the mill itself, and I guess the surrounding costs associated with that. It's probably close to $250 million out of the capex. So that's a big portion right there. There is the opportunities to work with other companies in the area that are also developing and have the potential to be future producers. Maybe centralize a mill that would substantially reduce costs. But everything we've done in our study to date is really as a standalone project. So consider it like a worst case scenario. I think there's a lot of opportunities to achieve much reduced capex out there for this project.
And obviously that feasibility study was a major milestone in 2023, but you've also recently submitted an application to the Canada Nuclear Safety Commission. So when do you expect to hear from that, and what else do you have to do in terms of permitting before you can start to build?
Sure. Well, I'd say that the permits that we expect to receive in order to be able to build and operate a mine are still about 2 years to 2.5 years out. So, we'll be, you have to achieve permitting approval at the federal level with the CNSC. And this is something that we put in our application with CNSC about almost 2 months ago now. But we, in the meantime, also working at the provincial level for the environmental assessment part of the equation. That's been ongoing with the province of Saskatchewan for a while. So everything will still come together. I would say in the next 2 years, we expect to receive the permitting from both federal and provincial level that allow us to go forward. But key to that, I think to me, there's 3 pillars that you're always working on, simultaneously. First of all, the economic studies. Well, we've already achieved the feasibility. The permitting I've just discussed. and indigenous relations, and getting support for the project at the local level going forward. And I think we've achieved a lot of great milestones with our social engagement as well. We have a great deal of support for this project. People want to see it develop. They understand the benefits of a major mining operation in this area, and just what the benefits can mean by way of jobs, services, just general economic improvement to the whole region.
And with that sort of lead time before construction, what are the other catalysts that investors can look to in the meantime? And also, what are you thinking in terms of project funding? Has the IRA made much of a difference to the miners? Obviously, it's got nuclear front and center of that, but that seems to focus on the downstream.
Yeah, for sure. I guess there's a number of topics to touch in there. But let's say I think we're well on the path to getting approval at the provincial level. The news flow for us will be continually updating the shareholders on where we're at on the permitting front. And I think look for us getting impact benefit agreements in place with our key indigenous partners in the area as well. So those will be important major milestones that we'll continue to announce to the market. There's every likelihood that we'll be getting exploration again too, and this is the kind of a uranium market that encourages exploration. We've got one of the best pieces of land at PLS with we're obviously have a world-class deposit that we're advancing, but there's about 95% of the property that we really yet to systematically explore, and we think has great potential for further discoveries. So I think as we go forward, there will be some advancing on the exploration side of the equation too. But all these lead up to the activities over the next 2 to 3 years. Now, your question on the IRA, what's that, the Inflation Reduction Act, I guess is a bit of that's what it's called, but I don't see how that it's part of it is the effort towards clean green energy. So I'm not sure where the inflation reduction comes in that part of the component, but the US and Canada too, I suppose by the same measure, is definitely focusing on clean energy, and the government getting behind projects that can go forward. We know that the North American assets are so key. The North American uranium assets are absolutely key to the clean energy solution. I think we'll likely see continued support by the government, whether it be in grants, just ease of permitting to move projects forward. But the world is recognizing that nuclear energy is a key part of the equation in power generation. I think the governments, have already started to set things in place to be able to support clean green energy, and nuclear is such an important part of that equation. So there's lots of different aspects to it and how it could all play out, but I do think that the bottom line is that the government will continue to support development of these projects, hopefully shortening timelines, but making it possible to move projects from development stage to producing assets, and hopefully by supporting the industry in just a multitude of different ways. And
you touched on part of the next point I wanted to cover on ESG with respect to the First Nations, and obviously projects in your part of the world have focused on that aspect of things for a while now, but with the energy transition, the broader investing world is now looking at ESG differently. And how have you had to make any changes to the project to make them more compliant, or how are you tackling that?
Sure, understood. Well, ESG is certainly a lot bigger buzzword now in the industry. I think we've been, even without it being formally called ESG, we've certainly everything we've done in this project since the beginning has always been about developing it responsibly in the best environmentally sound practices possible. I mean, the province demands it. The province of Saskatchewan demands that mining projects be done to the highest level of confidence and criteria with respect to the environment and with respect to involvement of the communities in there. I think uranium itself leads to being very positive on the ESG side, because you're talking about clean energy, and the Saskatchewan deposits in particular are even more ESG friendly, if you will, than other uranium deposits elsewhere in the world, because you're looking at smaller footprints of mines with yet larger uranium resources. So small tonnage and yet high uranium output there. I think, as opposed to a large open pit in, in other parts of the world, it's just, you're dealing with much smaller footprints. And so I think by all aspects, you'll see ESG being an important part of the corporate philosophy of companies going forward. We've formally adopted and embraced ESG. We're working towards rating facilities in place by this calendar years, and we strengthen up our board to include ESG expertise there. So it's really coming through at all levels of the company. But I think we're in the right sector that's ESG positive to begin with, and every step that we take is making sure that we're compliant in every way that we can be.
And in terms of the uranium market, obviously since COVID, things have changed quite a lot. The new focus on the energy transition, and then shutdowns, meaning that inventories which have sort of dogged the market for a long time have been cleared out, like in many other commodity markets. You've also had the addition of the Sprott uranium ETF, but in the last couple of months the price has started to creep higher again, even though the equities got hammered earlier in the year. And so what are the key developments that have happened more recently in the uranium market?
Well, I think sometimes there's a little bit of disconnect between equities and the price of the commodity. As you already mentioned, during the last few years, I'd say the price of the commodity has been moving northward. I mean, nothing ever goes up in a straight upward line, but the trend is certainly north, and equities were following the price of the commodity. The last couple of months have been a little bit of a disconnect, where the price of the uranium commodity continues to go up, and I mean across the board, all the uranium equities suffered probably 20 to 25%. But I would say in the last maybe several weeks, 2 to 3 weeks anyways, we're seeing a stabilization in the prices, and in fact starting to move northward there. So I think that there was a little bit of disconnect between equities and the commodity price itself, but that's starting to come back together again. I'm really quite encouraged with where we're at and the potential. I mean, we know that the price of the commodity, I mean, essentially has to double for incentive prices to be met for most projects to come online. And we also know that our project will be one of the lowest cost producers out there, so our margins are only going to increase as the price of the commodity moves northward. So I think that's a little bit of a summary. Hopefully that answered a bit of your question.
Yeah, and working its way through the American government at the moment, there's a bill to exclude Russian uranium from the Western supply chain. How big an impact would that have on the market?
I think it has a huge impact. If you consider that a great deal of the refined uranium comes out of Russia, and a lot of it comes into the U.S. For the utilities there. There's no sanction in place right now, but there's probably a little bit of self-sanctioning going on from the utilities and encouragement for them not to use Russian uranium, and there could be official sanctions coming online. But that combined with Kazakhstan being the number one producer of raw uranium to the market, I think that what we're experiencing in today's world is a bifurcation of the uranium sector, where the material where we're used to getting it from, the Russia and the Kazakhs, is probably sticking closer to home in that area and staying in the east. So Kazakh uranium looks to be working its way more into the China requirements and not so much on the North American. So I think North American assets are going to have to step up and provide a great deal of the uranium for the utilities, particularly in the US and those in Europe. Just a reality of geopolitical environment that we're in right now. But that only bodes well for us because we're right in the heart of the North American development phase, and we're going to be an important player in the next decade for sure, as uranium mines in the Athabasca start to ramp up, and the U.S. consumers, the U.S. utilities will have an ever increasing demand for North American assets, and I suppose the same story in Europe as well. So we couldn't be better positioned, I think, for the new emerging realities in the uranium market.
Excellent. And perhaps as a sort of finishing point, you mentioned that the discovery on Fission was 10.5 years ago. You've now got the updated feasibility study out, but why is it that investors should be looking at the company now? Well, we're one of the very few development projects that can make it early on into this next phase. So over the next say 3, 4, or 5 years out, there's just a handful of good companies like that, and they're the one. They all seem to exist in the Athabasca Basin that are going to be part of the next phase of producers towards the end of this decade and early into the next one. So we're sort of next in line, I suppose you could say, in the queue for projects to move from the stage they're at into producers. And I think that that creates a great opportunity. These are the best projects out in the world. The development stories that you see in the Athabasca Basin, they're the best uranium stories anywhere in the world, and I encourage investors to really take a strong look at them and just get behind the whole nuclear renaissance that's going on, and just get a sense of just how important these projects are to the clean energy revolution that we're in. Brilliant. Well, look, Ross, I've really enjoyed talking to you today, so thank you very much indeed for your time. Hopefully we'll be able to catch up soon and see what developments and progress has been made. Very good. Thank you very much, Oliver.